that I only got light stuff.
So on, Mr. Vish also will be joining.
Sorry?
Mr. Vish Arunachalam, will he be joining?
That I only got
Yes.
light stuff.
So on, Mr.
Yeah. Vish will be joining as an attendee because we have Sudha Michael from California as a representative of ICI San Francisco.
Beijing, how are you? How are things in Delhi?
Now it's fine. The weather has improved now a lot now. So it is cold and now it's fine.
So all excitement in Delhi now, first week of February.
Yeah, AGM is now on 7th.
7th, yes.
We are beginning to get the attendees, and I'll look out.
Consulate General is joining.
Yes, he's
Yes.
joining.
Raja or Pawan, could you just outline quickly what is time allotment for each, so we play within the boundaries, if you don't mind?
No, that's perfect. Just give. I was going to share the agenda. Yeah, and essentially, yeah. So essentially, it's about about 12 to 13 minutes for you, so.
Okay.
Yeah.
All good.
Raja, sorry to interrupt. Can you please send CGI San Francisco link one more time, please? I will send you the email address, and you may have to send it over there. Is unable to join the link.
Okay.
So can you please send? Yep.
Yes.
Let me forward you the email address once I get it.
Yeah. Yeah, give me this. You're putting in WhatsApp on or sending the email?
at least we can start. I mean, hold on. So give me
Yeah,
a
yeah.
second.
Yeah, just give us, let's get that sorted out and we'll start. Yeah.
Okay. Wish has put in our budget group. So
Okay. All right.
yeah, send the link again. Yep.
Okay. Link. Just 1 second. Yes, it should be there. Yeah, just sent. Just sent. Okay. I think in the interest of everyone's time, we can we have a quorum. We can get started. We have in the range of 36 participants right now. We had about 150 registrations. It could go up to 50, 60 typically. All right. Can you hear me all okay?
Yes.
Okay. All right. Good morning, good afternoon, good evening, wherever you may be. I am Raja Chalasani, Vice Chairman of ICAI Houston Chapter. On behalf of today's organizers, ICAI US chapters in New England, San Francisco, Houston, Dallas, Chicago, New York, and Washington, DC, and also our supporting organizers, Indo-American Chamber of Commerce of Greater Houston, and BMM. It is really my pleasure to invite you all for today's event, India's Budget 2023. As NRIs, overseas investors, CAs, the budget impacts us in many different ways. And for you today to unpack the implications of the latest budget, we have a very accomplished group of panelists, starting with Honorable Consul General of India, Dr. T.V. Nagendra Prasad. Thank you for gracing the event. I think he's trying to make it through the panel, but would like to thank him for gracing the event. We also have past presidents of ICAI, CA Ved Jain ji and CA R Bhupati ji. Ved Jain ji and Bhupati ji have been torchbearers of the CA profession for decades. They are much sought after speakers on the topic of the Indian budget year after year. And probably most importantly, they are teachers and mentors for generations of chartered accountants. We are very glad to have you here, sirs. We also have CA and CPA, Mr. Cecil K. Nazareth, who will unpack the specific implications on NRIs. And thank you, Cecil, for making time today, despite everything that's going on with the weather and all that in Northeast.
Thank you.
We also have finally CS, Ms. Kritika Narula from Startup India, who will talk about the impact on overseas investors. So with that, we will get the event started. Couple of logistics points here. If you do have questions, please use the Q&A feature. Raise your question, and if it is for a panelist, please specify the name of the panelist. The questions will be addressed in the Q&A session towards the end of the agenda. We also have a few poll questions for you, so please answer those poll questions for engagement. Now with that, we will get started, and let me check if we have, let me stop sharing. Yeah, let me check if we have worked out the challenges with getting the CGI.
So Raja, CGI has joined as attendee.
Okay.
Can you please promote him as a panelist?
Yeah, for sure. For sure. I'm looking, there's a number of, oh yes, I've got it, and I will do that. Promote to panelist. Sir, Honorable Consul General, oh yes, we got you. Thank you very much. With that, we will get the event started, and I will request my colleague, Chairman of ICAI San Francisco chapter, to do the introduction. Just give me 1 second, Sudha, before we start. I will get these spotlights and all that going. Yeah. Yeah, please, you can go ahead now, Sudha. We are ready.
Thank you. Hi, good morning and good evening to audiences joining all over the world. I'm Sudha Michael. I am the chair for the San Francisco chapter of Institute of Chartered Accountants of India. It gives me great pleasure to welcome and introduce Dr. T.V. Nagendra Prasad, Honorable Consul General of India, San Francisco. Dr. Nagendra Prasad is our guest of honor for today, and he will get us started with this budget, India's Budget 2023 event. Dr. Nagendra Prasad, before taking over as the Consul General at San Francisco, he served at the Ministry of External Affairs as a Joint Secretary heading the Gulf Division. He joined the Indian Foreign Services in 1993 and served various positions at Indian missions, including Tehran, London, Thimphu, Bern, and Ashgabat. He was India's ambassador to Turkmenistan from 2014 to 2018. We want to thank Dr. Nagendra Prasad for his deep commitment to working with the US chapters of the Institute of Chartered Accountants. Partnering with the CG office, the San Francisco chapter has collaboratively conducted many events on a variety of topics. He truly is an enabler for us to create the Indo-US pathways. Dr. Nagendra Prasad, the stage is yours. Please come and address the event.
Good morning and to everyone. Thank you very much for that generous introduction. I think since I have come in contact with the SF chapter of ICAI, we have really done several events which are of very, very significance. Thank you very much to SF ICAI team chapter. First of all, I would like to congratulate and thank ICAI SF chapter and ever active Vish Arunachalam and then his team for this session on India's budget. If I recall, we did a similar session last year also.
Yes.
As members of ICAI, I'm sure you all have keenly observed the highlights of the budget and its implications. I'm sure the panel will be getting or delving deeper into the various aspects of the budget. I just would like to say that we must all congratulate Honorable Finance Minister of India for a visionary budget. As I see the provisions in the budget are for both inward and outward objectives to be realized. That is for the Indian economy during this Amrit Kal. I think it lays a foundation for the next 25 years of Amrit Kal, which we are looking at that to leap India into the global stage. So the concept of Saptarishi, 7 pillars, is admirable. As it is the first budget of Amrit Kal, it has catered to touch the lives of all the social strata, which one cannot forget, being a large democracy, being 1.4 billion population. So all the social strata through various schemes, including with special focus on tribal populations, while continuing the previous provisions provided for welfare schemes, and also to usher in growth. So both the balance has been very, very clearly brought out in the budget. Simplification of tax regimes, which is always has been a query in various roundtables we hold in Silicon Valley. This has been sought by various investors. Most recently, we had a startup roundtable. There also people come up with and suggestions, etc. I think most of them. That is the beauty of the government, that they have taken all such advices or given by the guidance given by several associations. So simplification of tax regimes has always been sought, and then it has been incorporated in this, and it is from both inside and outside also. But I only observed abroad last 2 years, several people suggest on the taxes, etc. As India is emerging as a manufacturing hub, with the recent example of manufacturing Apple phones or AirPods, etc., with the productivity linked incentive scheme in electronics manufacturing, in semiconductors. So these are all creating an ecosystem enabling expansion of manufacturing in multiple sectors and at a faster rate. I also would like to point out about the 30 Skill India International Centers to help provide skilled personnel for various sectors. See, we always say that we provide huge human resource pool, but when it comes to particular industry, when it comes to, I saw from Silicon Valley people starting a bit of institution for 6 months, etc., to train people to get them back into their sectors. So that kind of, I think the 30 Skill India International Centers will help provide this particular skills commodity sometimes, in fact, particular skill people. So various industries in preparation to become manufacturing hub of the world. In infrastructure, we see a huge jump in allocation of capital outlay for railways. You saw it is 2.4 lakh crores, and proposal for new airports, 50 airports and helipads, and 10,000 crores for urban infrastructure development every year. The smart cities project, etc., are going on, but particular focus is there on infrastructure, and this is all to create the ecosystem. Without infrastructure, you can't promote manufacturing, etc. So that we have to give credit to the government. Let me also mention that all these will help in generating employment. These investments into infrastructure, skilling centers, etc. there is a provision for establishing 3 centers of excellence of AI. Nowadays, everyone talks about AI and ML, and that is taken, which envisions India to catch up with emerging technologies. As we are the 3rd largest ecosystem for startups, it's observed that to give a push in agricultural production. Actually, I have seen in a couple of pitching sessions in Silicon Valley that there were startups in agriculture sector. Particularly, I saw in processing, but I think this particular agricultural production and productivity to push it in a larger perspective, an agricultural accelerator fund has been set up. I think this is a very, very welcome, and then this gets into the semi-urban and rural areas. All these provisions made in the budget have implications for investors from abroad and the large market with abundance of skilled personnel, and to create favorable ecosystem for all investments. I'm sure will attract investors and manufacturers from abroad. There is stress on innovation, research, and development and manufacturing. As you're all tax experts and also look into economy in a deeper way, I would suggest that focus on aspects that would help more engagement of foreign investors and manufacturers. Not only in that, but in startup ecosystem. We launched a startup bridge when Honorable Commerce Minister was in Silicon Valley, and to bridge the investors and mentors on this side with Indian startups. So just I'm sure I look forward to a fruitful discussion from all you experts. Once again, I wish you all a fruitful session and many more sessions to have with ICAI SF chapter to take forward this noble initiative. Thank you very much. And then once again, thank you ICAI SF chapter for inviting me to this wonderful event.
Thank you, sir. I'm going to add spotlight on Pawan. Yeah, Pawan, you should be there now.
Hello, good morning. Today, I'm Pawan Sharda, and I am the chairman of Houston chapter. Today, I have a privilege of introducing Mr. CA Ramanathan Bhupati. Well, most of the CA students know Bhupati sir. So Bhupati sir is from Chennai, India, and a fellow member of CA Institute. He is a founder partner of R. Bhupati and Company, formed in 1976, which is into audit, taxation, and consultancy. The firm is ISO certified and also has a registered office in Dubai. So for more than 3 decades of experience in training and served as a resource person in taxation in ICAI, RBI Training Institute, and various professional institutions. Bhupati sir also served as a member of Central Council of ICAI for 9 years and was also elected as a president of CA Institute for the year 2003 and 2004. He was also a member of Education Committee of International Federation of Accountants and apex body for accountant worldwide for the term 2003 to 2006. Bhupati sir is also a founder committee member of a Chartered Accountants Study Circles, Chennai. He is also a chairman of Geozit Financial Services Limited and served as an independent director, chairman of Audit Committee. In the past, Bhupati sir has also held various positions like Director of Jubilant Industry Limited, IRDA. He was also a member of Committee by World Bank, and there are many other institutions where he has held various prestigious positions. So Bhupati sir will be talking to us about India's macroeconomy, various sectors, and initiatives by government. All over to you, Bhupati sir.
Greetings from Chennai, India. CA Pawan, CA Raja, CA Sudha, Consulate General of India, Dr. T.B. Nagendra Prasad, the co-panelists, CA Cecil Nazareth, CA Wade Jain, past president of ICAI, and Nivedita. Let me begin by thanking the organizers for the invitation extended to me to make a presentation on the Union Budget 23-24. My pleasure to participate in this event. Let me begin by acknowledging that this presentation is based on a short speech given by a former Indian ambassador to France, plus the publication of the Institute of Competitiveness, Gurgaon, Delhi, a publication titled India at 100, and the budget proposals. To begin with, I would like to tell some 4 facts and incidents about India, and for this purpose, I will share my screen now. There are 4 large economies in the world based on power.
I don't
purchasing
see
power
your screen, sir. So this is Raja here. I don't yet see your screen.
You don't get it?
Not yet.
Well, you were tried, no?
Yeah. We tried it. It worked at that time.
So, do you want us to share, Bhupati sir?
We tried it this morning.
It's come now?
Yeah, it started now.
Perfect. Yes, sir.
Okay.
And if you can try the presentation mode, that'll be great.
Yeah, the presentation mode is on the bottom of the
Yeah, we tried
right
it.
side bottom.
Yeah, we tried it earlier. Okay. Yeah. Perfect. It's coming. Thank you, sir.
There are 4 large economies in the world based on purchasing power parity. They are China, USA, India, and Japan. We're glad that India is occupying the 3rd position. And what is really missing is Europe is missing in action. The next thing I would like to say, there was a report, the New World Wealth Report 2020. And as per this report, the privately held wealth in India is $8.2 trillion US, which is 6th largest in the world. And by the year 2030, that is about 7 years from now, average Indian wealth will be twice that of an average German or Britisher. And how do we spend this? We spend it by eating better, looking better, communicating better, and studying better. For those of you who would be interested in a little bit of statistics, there are 650,000 towns and villages in India. And when I say looking better, this is for the looking better statistics. 650,000 towns and villages in India and 15 million beauty parlors, which is increasing at a fast rate. That's how we spend our money in looking better. Communicating better, 1.6 billion mobile connection for 1.4 billion population and 1 billion smartphone connections. Now, with this type of connectivity, I am sure we could do wonders. In 2015, the 3rd incident I'm sharing is the International Yoga Resolution introduced by India was co-sponsored by 177 out of 199 members, largest in the UN history. Unman, the French ambassador to India, said that we support yoga, we support India in yoga because India is considered to be the spiritual mother of all mankind. And finally, in 1965, we fought a war followed by insufficient rains. In 1966, there are no rains. And there is a shortage of agricultural products. The then Prime Minister of India, Mrs. Indira Gandhi, had come to US asking for food. And the next day, New York Times carried a headline, "The new Indian Premier comes to US begging for food." She came back to India and took a resolution that never again they'll go back for food. And what is really very important for us to note is India is presently the second largest producer of food grains in the world. From that 66 position to the year 2023, we are now the second largest producer of food grains in the world. What is the result of all these changes and advancements? I would like to tell you that 15% of the world population from Europe ruled 85% of the other population for two centuries. Now they are losing their privileged position. Greatest disease in developed nations, ladies and gentlemen, is depression and loneliness. 9 million people are impacted by depression. I understand that Britain is having a minister for loneliness, training people to be companions. As against this, India is bubbling with self-confidence and renewed energy. We had a series of nature's fury. 2004, we had the tsunami. 2005, the Kashmir earthquake. 2011, Sikkim earthquake. 2013, Kedarnath floods. 2019, Kerala floods. We did not seek any international help. And we managed with our own resources. Lessons from all these things are: one, others have written our destiny for too long. Country that forgets its past has no future. We made mistakes in the past, never again we will repeat. These are the lessons we have learned over the period of 50 years, 75 years. Seventh, the commitment: we will write our own destiny. No one else will write it for us. And that's how it's a preamble to, in July 22, we have drafted the roadmap for India at 100. Now, this all began in the year 2017, the preparation for the roadmap of India. And since we are addressing a major part of the participants today are from the US, that will be from the US. Professor Porter of the Harvard Business School visited India in the year 2017 and had a discussion with the Prime Minister of our country, Mr. Narendra Modi. And during the course of the discussion, the Prime Minister seems to have told him that let us develop a plan, for India at 100, 25 years roadmap, so that we could get prepared for it, for this Amrit Kal, which has now been announced. Now, they prepared and published this book with the help of the Institute of Competitiveness, Dr. Amit Kapoor and Professor Christine from Harvard. They prepared this document and released it in July 22. And what is the goal? The goal, the point they mentioned here is the few countries in the world whose future is not only important for their own citizens, but also for many other countries in the world. If we find solutions for our problems, that means we are finding solutions for other parts of the world. India is one such country. Now, the goal is to move from lower income country to middle income country by 2047, and to target to become a high income group country by 2050. The book addressed it up to 2047 only, and the Prime Minister Modi's intention is to make it a high-income country by 2050, to create, develop, and share a sustainable economy. This is the goal. Now, India has a great potential. We must unlock this potential. It is not easy because of size, culture, government structure, and political climate. In the past, we have tried out some simple rules. Like, when you want to boost export, there is incentive for export, subsidy for export. We want to invest, give some helping hand to a certain type of industry, we used to give some concessions. But that was only specific. But here, that type of reforms are not going to work. That is the finding of this group. There should be a change in the process of thinking. When I say change in the process of thinking, there should be coordination between the various departments. There is coordination between the center and the state. And this type of change in thinking process should come so that, we could accomplish our dreams. This is also understanding. Now, to understand the current economic situation, they went into diagnostic mode and they found out these things. India is one of the 12 to 15 countries which are high long-term prosperity levels sustained continuously for a period of 30 years till the pandemic. For 12 to 15, one of the 12 to 15 countries, they maintained this for 30 years. No steep fluctuation. There's a small mistake in this thing. No 5-year period drop to GDP growth of less than 2%. So that's a correction we have to make. And the prosperity can be split into two parts. We have high prosperity levels. They divided the prosperity into two parts, productivity and mobilization of labor. On the productivity front, we have done exceedingly well. When I say we have done exceedingly well, what one individual can do in one day, he is able to complete it within half a day. And therefore, the productivity of each person has gone up. But the mobilization of labor, how many of our labor force who are available for employment are being used for the country's purpose is a question mark, is a concern for us. Although our productivity is satisfactory, the mobilization of labor has not only stagnated, but also deteriorated. So this is a challenge. This is a challenge and which we have to address. And accordingly, they identified 4 challenges, which is very simple terms is called 3+1S formula. What are the 3 challenges? And the last one they added subsequently: social challenge, the shared prosperity challenge, inequality, sustainability challenge. These are the 3 major challenges. And the last one, which they added subsequently, is the shocks from external, which we'll just make a mention about. Now, as far as the social is concerned, this is a good part of our population not having access to proper healthcare, quality education, good environment, government spending on healthcare relatively less. This is a finding of that group, that high-level group which was formed, and they went into it and they started working for 3 years, 4 years, and last 6 months they found out that the government spending on healthcare is relatively less. Now, this is what has happened during the last 3 to 4 years. Now you see here, 11.7 crore household. This is for rural upliftment. They said the social contribution. 9.6 crores LPG connections, 220 crores COVID vaccination, 47.8 crores Jan Dhan bank accounts. Insurance cover, this is very important. Insurance cover for 44.6 crore persons. So like this challenge which they identified has been addressed partially during the last 4 years itself. Now coming to health, now these are things which they have planned. This is also another area. Our country, people are not getting the required medical treatment. So they have to focus on it and develop on it. 157 new nursing colleges to be established. The sickle cell anemia elimination mission to be launched. The joint public and private medical research to be encouraged. New program to promote research in pharmaceuticals to be launched. All these things will have long time benefit only. It's not that you're going to get the benefit immediately. It will take some time for you to get these benefits, but it is absolutely essential, and that's why they allocated so much of funds for it. The second challenge which we are having is inequality, and here we have got 4 points to look into, 4 aspects. Gap between rich and poor, and this should not widen, but it is widening. Nothing wrong with billionaires and millionaires. However, a large part of our population getting an opportunity to improve is a concern. They are not getting certain vital opportunities to get the first job and to scale up. So this is a major issue which we have to consider, and that's what is being addressed in the budget. What I find very interesting and important is that whatever is the suggestions given, with all sincerity, they are trying to take it up and address it one by one. Mind you, it's a roadmap for a 25-year period. Therefore, they have to tweak it as and when we proceed. So this is a concern they have identified. Next one is geographic dimension. Few regions unconnected with developed parts of India. Some are darker, some are brighter, and steps should be taken to provide uniform opportunities. Demographic, 9 million people entering the labor market each year. Opportunity is not adequate to absorb new entrants. The first step is to provide a job, progress to the next level. Women involvement has been reduced. That is not the high-level employment, but people at the lower level. The number of women working has come down, so you have to do something to increase the number of women workers. These are things which they have to address and see how these 4 areas have been addressed in the budget. Covering new courses for education and training. First, you see, people coming out of colleges they are not readily employable. You have to give them some handholding, you have to give some training to them, and all these new courses which the Consulate General also mentioned on coding, artificial intelligence, they are trying to set up centers in different parts of India so that there is an all-round growth. To boost tourism sector, and this is also very important. This will create so much of employment. At least 50 destinations to be selected through challenge mode to be developed as a complete package for domestic and foreign tourists. States will be encouraged to set up unity malls for promotion of and sale of one district, one product. See, 2 things have been addressed here. One is employment, and second is the shared sharing, where various states get this opportunity, geographical index and handicraft products. So these are things which they have taken. And finally, we have the allocation for infrastructure and investment. Incentive to boost will have a multiplier effect. Increased capital investment outlay by 33.4% to 10 lakh crores of rupees. Continuation of 50-year interest-free loan to state governments to incentivize infrastructure investment. And in the course of the presentation, the finance minister did mention that this amount of loan to state governments will be reviewed on a periodic basis so that this is a thinking process. There should be coordination between the center and the states. Then highest ever capital outlay of 2.4 lakh crores for railways. 100 transport infrastructure projects identified for end-to-end connectivity. All these things which will bring in the connectivity between various parts of the country in India. Second, it will provide employment. Then it will reduce the trade cost. The competitiveness of Indian business will improve. All these things will accelerate. Now again, it's not that the impact of it will be felt next year. The impact of it will be felt over a period of time. So all these things have to be taken at this point of time to visualize our dream of Amrit Kaal. Sustainability, see, there's no point in having economic growth, whereas they are burying or destroying a future without preserving climate, water, natural resources. So sustainability is very important and significant. And let's see what they have done for this. Will incentivize states, union territories to promote usage of alternative fertilizers, waste to wealth plants, the Gobardhan scheme for promoting circular economy, and the mango grove plantation along the coastline. So all the challenges which they identified by the Institute of Competitiveness have been addressed in this budget, and the allocation given is also quite substantial to achieve these objectives. So this is the third S which they have done. And from the NRI perspective, what is it you could look at is that investment opportunities in sectors like infrastructure, green environment, logistics, and tourism. These are areas which are opening up. And when they open up, there will be opportunities for investment in these sectors, which will attract attention. The associated technology initiatives connected with all these industries. So these are the NRI perspectives I thought I could share with you. And then, of course, Mr. Ved Jain will be talking about it. In order to attract investments from outside India, the participatory notes with an offshore bank unit, they are given some tax concessions. So he will be talking more about it. This it was there earlier. It was stopped in between, and now they have reintroduced it so that people from outside India can leverage on the growth of our country. The process of contract settlement. This was mentioned in the budget speech, saying that when we expand our overseas business, there are bound to be disputes. And when there are disputes, we should settle it quickly. And for which there is a new scheme, the process of settling the contracts. And that, if it is accelerated and put into place, then it will be easier to solve disputes and get it going. The features not covered in this budget, two aspects which are not been touched upon. And this has been mentioned in the, the newspapers after that on the disinvestment, nothing has been mentioned in this budget. Nothing was mentioned in the last budget. Nothing is mentioned in this budget. And another person made observation that disinvestment is not taking place the way they thought it would happen. And therefore, it is not the right time to go in for disinvestment. It is better they go slow on it. And hence, they have not made any mention about disinvestment. And finally, on the FDI front, they have not made any specific mention in this budget. But budget is not the only document where they could make announcements for FDI. They could come out subsequently also. And depending upon all these developments, they will decide on the FDI rules. The last S, which they added to absorb impact of global integration, impact of international events like the Ukraine war, US inflation, climate change, this all happened. Like this, if something comes in the future, how to take that shock is something. If it happens, then either our fiscal deficit will be thrown a little bit out of balance, or some of the projects will get hampered. So this is a thing which they have to have in mind. So this, in short, is my presentation. Within the time allotted to me, I tried to cover a quick glance of what all suggestions are given in these budget proposals, and I'm sure the other participants will take it. Thank you for the opportunity.
Pawan, you're on mute.
Thank you, Bhupati sir, for your insightful and presentation of India budget. So now I take a privilege to introduce Mr. C.A. Ved Jain. He is a professional practicing specialized in direct taxes. He has special emphasis on tax planning, tax litigation, and tax advisory for multinational corporate houses. Mr. CA Ved Jain, he is a fellow member of ICAI for more than 4 decades, and in 2008, Sir Ved Jain sir was elected as president of CA Institute. CA Ved Jain has also been a founder member of Indian Institute of Corporate Affairs, an academic institute set up by Ministry of Corporate Affairs, Government of India, for capacity building and training in various subjects. And Jain sir has also been a board member of International Federation of Accountants during 2008 and 2011. On Corporate Forum, he has been a chairman committee on direct taxes, vice president during 2015-2017 of ASSOCHAM. He has been a director on the board of National Aluminium Company Limited, NALCO, PTC India Limited, PTC Financial Services Limited, IACI Accounting Research Foundation. He is a director on the board of DLF Limited, Inventia Healthcare Limited, and chairman of MCX Clearing Corporation Limited. He is most sought after panelist by the media on the contemporary issues, maybe banking, capital market, accounting, taxation, or corporate laws. Ved Jain sir will be talking about direct and indirect taxes and any taxation issues related to NRIs. All over to you, Jain sir.
Thank you, Pawanji, for that introduction. Honorable Consul General, Mr. Prashad, Chairperson of the San Francisco chapter, Mrs. Michael, Mr. Raja, Mr. Pawan, Mr. Cecil, my fellow speaker and very dear colleague, Mr. Bhupati, my dear friends, brothers and sisters, it's my proud privilege to be here in this program being organized by the 3 chapter of the Houston, San Francisco, and New England. Last year, I was also here in this program, and this time Pawanji called me up again, and I said, yes, I will be there. I will love to be here in this program. Friends, when budget is presented, the finance minister has his own compulsions, as we know as an accountants. Budget is an exercise to balance expenditure against the income. India, with such a big population of 1.4 billion, one can appreciate the expectation of the people at large. The finance minister has to address the concerns, the expectations, and the issue arising therefrom. One thing which she has to keep in mind and what we need to appreciate is every rupee spent, she has to find out a resource. Every concession given, she has to find out any concession which need to be withdrawn. Any demand to be met, any subsidy to be given to anybody, a resource has to be generated. And resources can be generated only through taxes, and there are no other means with any other government except some capital receipt, which we talk about disinvestment on some commercial activities like licensing of spectrum, etc. The government can raise the resources. And when such a big country and a budget is being presented after 3 years of COVID, one can see how much difficult the task of the finance minister would have been. And this, but fortunately, India having handled the COVID very, I think, I say in a positive manner and very, I think, efficiently. And this being a first budget of the Amrit Kaal at the next 25 years, which the Honorable Finance Prime Minister announced that the next 25 years will be Amrit Kaal when we will be completing 100 years. Obviously, she has also to give it shape and dimension and what we believe India will like to be in the next 25 years. And taxation always has been, I will say, as a matter of policy, as a tool to give shape to India's destiny, economy, etc. What Mr. Bhupati was talking about is geographical imbalances, balances in different sectors, inequalities, energy, environment, all things I think need to be addressed, and taxation over a period has been used as a tool or as an instrument to do this. And I must compliment the Honorable Finance Minister that while presenting this year's budget, she has presented, I will, on a taxation aspect, a very revolutionary budget in the sense she has tried to handle the situation. As I said in the beginning, no one can expect a concession unless there is some concession has to be drawn. And the first thing, which is very, very positive, one must keep in mind, when the demand and expectation are so high, not levying any new tax itself is a very big concession which is given. So the finance minister this time, as you would have heard, I believe now the budget is more than 100 hours old. It was presented on 1st February Indian time between 11 to 1 p.m. And now I believe it's more than 5th February is more than 100 hours. And there is absolutely no new tax which she has levied. If you can see, just see. There have been some changes, adjustment on the indirect taxes on the what we call in custom duty, that to also to address some of the areas where we want to have protect the local industry or where we want to have more work efficiently. By and large, more concessions have been given. So that's a big advantage. I will say that's a big compliment to the Honorable Finance Minister for not levying taxes. Our expenditure, look at the number of the numbers, how India's budget has gone up, the total allocation. Last year, the total allocation of expenditure was 37 lakh crore. This time it is 46 lakh crore total expenditure. And how these numbers have increased over a period, I will be talking to you later on in case time permitting, looking at the issue. Our budget allocation has gone up by 25% this year. This itself is an indication how Indian economy is behaving. Now coming to the issue of taxation, the first and the foremost issue of the taxation is that there will be no tax on an income up to rupees 7 lakhs. I will just start sharing my screen on that point. I hope you can see the slide, my slides on that issues.
Yes, sir. Yes, sir.
Okay.
Good.
It's just not moving, I believe.
Yeah. It's
Now
moving.
this is, if you can see it, what were the old regime and what she has done it. And I can just take you. She said there will be no tax up to income of rupees 7 lakh. And then she said on income between 3 lakh to 6 lakh, the rate will be 5%. 6 lakh to 9 lakh, the rate will be 10%. And from 9 lakh to 12 lakh, the rate will be 15%. And from 12 lakh to 15 lakh, it will be 20%. And beyond 15 lakh, it will be 30%. These are the new rates which have been prescribed. Now it raises two issues immediately. In your mind, probably it will raise two issues. What concession has been given? And secondly, when we say that income is exempt up to 7 lakh rupees, how come the slab is starting from 3 lakh rupees? The answer is very simple. There will be no tax on income of rupees 7. Why it will not be? Because the law says now that a person who is having income only up to rupees 7 lakh, he will get a rebate of rupees 25,000 in his taxes while computing taxes. So an individual who has an income of 7 lakh rupees, his tax liability comes to rupees 25,000, 3 to 6 lakh, 5%, 15,000, 6 to 7 lakh, 1 lakh, or 10%, 10,000, 25,000 rupees. And now there is a provision that you will get a rebate of 25,000 rupees. So there your tax liability is absolutely nil. But the moment you crosses over this threshold of 7 lakh rupees, this rebate stand withdrawn. With the result that if your income is more than 7 lakh rupees, your tax liability will start right from 3 lakh rupees. And there is a possibility that if your income is say 7 lakh 10,000 rupees, you may end up paying 26,000 rupees of tax because you will not be entitled for a rebate of 25,000 since your income has gone above 7 lakh. And obviously, the objective is very clear that a person who earns up to 7 lakh rupees in a progressive system of taxation, he must get a concession. But in case he is getting more than 7 lakh, then he doesn't need any concession. One thing more to be noticed is that this concession of 7 lakh rupees is available only to a resident individual. This is not available to a non-resident. So all of you probably non-resident, now you will not be eligible for this rebate of 25,000 rupees. And in your case, the income slab will start from 3 lakh rupees as against 2 lakh 50,000 rupees, which was earlier available. and you will be required to pay from 3 to 6, 5%, and 6 to 9, 10%. But now still you will wonder whether I am benefited by this or not, a person, a non-resident, I'd say. Just see what is the tax liability on an income of rupees 10 lakh. On a 9 lakh rupees of income, what I will see is 3 to 6, it will be 15,000, and 6 to 9, 30,000, 45,000. And then on 1 lakh extra, it will be 15%. 60,000 rupees tax on 10 lakh rupees income, which is just 6% of the income. On 15 lakh rupees, this tax liability comes to 1,50,000 rupees, which is just 10% of the income. And on an income of 20 lakh rupees, it is 3 lakh, which is just 15% of the income. So this is a big regime. And this benefit of 3 to 6, 6 to 9 is available to all as a resident, except to resident, because resident can get a rebate. But in case they do not get rebate, they fall in line with other persons. So non-resident will not be eligible, and they will get the new tax regime, and you have to pay tax this. This will also be applicable to HF. This will also be applicable to association of persons, and this will also be applicable to the body of individual. Another change which she has given is that the surcharge, which used to be 37%, has been reduced to 25% on income above rupees 5 crore. With the result, now the maximum chargeable tax rate, marginal rate in India has gone down from 42.7% to 39%. Now just wonder what is the position of taxation in India now. As an individual, the maximum rate is 39% with this structure, which I have just given you, 5, 6, 10, 9, 5, 10, 15%. With a company which is a new company in manufacturing with a tax rate of 15%, an ordinary company with a rate of 22%, a partnership firm LLP with a rate of 30%, individual with a rate of 30%, but the surcharge going up to 39%. I believe India is one of the countries which is the tax rate is the lowest now in the world. We have given a lot of incentive to the peoples, and this I believe when you compare across the developed nation, I think this is one of the lowest rate which is coming up. And now the another question which is being asked, I believe probably in your mind may be that what happens, sorry. That this new rate is without any exemption which you were earlier entitled to, like PF, LIC, etc. And these were the 4,60,000 odd rupees. Some exemption was available on that point. But with this new rate also, without this exemption, still one person will be benefited a lot in taxation on that aspect. And these slides do indicate that even if you have say if you have made an investment of rupees 2 lakh, still the tax liability which you will be required to pay under old regime will be higher as compared to the new regime. And similarly, if you have a tax investment of 3.75 lakh rupees, still your liability will be much more as compared to the old in new regime. Now, only there is a small bracket between 7 to 9 lakh rupees. There can be a possibility where you need. But why this has been done, if you look at from the economic perspective, in India, we have 7.5 lakh crore or 7.5 crore taxpayers, out of which roughly 5 crore taxpayers are below 10 lakh income. Now, people saving an amount of 4 lakh rupees to save this tax, the net income available cash flow with the individual taxpayer is just less than 6 lakh rupees. Now, under the new regime, as I said, on an income of 10 lakh rupees, the tax liability is just 52,000 rupees, and the net income flow in hand will be 9,50,000 rupees. This puts extra money in the hands of the public, or the taxpayer of 3,50,000. If I assume that out of these 5 crore odd taxpayers, 1 crore taxpayers do spend this money of 3,50,000 rupees, which they are saving, which they do not save, and which they are spending the money. the additional money available will be 3,50,000 crore, which itself will give a very big boost to the Indian economy. Because this will, the whole objective of introducing this new regime and making it is a part of a default mechanism is to make sure that the people have more money in their hand to spend. And if they spend more, it gives a push to the economy and it creates a demand, it creates an employment, and that gives a idea. This is the whole objective of giving this idea of this thing. Apparently, for you people in US, it may look like to be very small peanuts and not a big bonanza, the smaller amount. So even I think 52,000 is not $1,000 even. It's just like $600 odd. But the fact remains is India big with such a big population. The if I assume 5 crore taxpayer, even if they save 1 lakh rupees more, do not save and they spend money, it will become a 5 lakh crore rupees. This is, I believe, the biggest change which will give this point in. Now, what other issues are there in this budget for you people as a non-resident on this issue? There is one amendment which has been made on that aspect is that the gift given by a resident to a non-resident. You will recall 3 years back, an amendment was made that if a gift is made by a resident to a non-resident Indian, now that used to be exempt because there was no tax liability as the income of the non-resident does not accrue in India. But a deeming fiction was created that in case a resident makes a gift to a non-resident other than a relative, then the gift shall be that income shall be deemed to accrue and arise in India, and on that basis tax will be paid by the non-resident in India. But now there is another category of people who are resident but not ordinary resident. As you are aware, for a period of 2 years after being a non-resident, even person returned to India, he enjoys a status of resident but not ordinary resident. So there was a possibility of a revenue leakage on that aspect. So this budget has proposed that any sum of money given by a resident to a resident but not ordinary resident, that will also be subject to tax in India at income from other sources, which can be, I think, as high as 37%. This condition is not applicable in respect of property or immovable property. The reasons are obvious, because a resident cannot make a gift to a non-resident in kind. The resident can make a gift to a non-resident or a resident but not ordinary resident under LRS, liberalized remittance scheme only, which is sum of money only. That's why the law says any gift made by resident to a non-resident and resident but not ordinary resident, that will be chargeable to tax. Another amendment which will affect, I think, and which should be, I think you must appreciate to understand on this part, angel tax. This is called angel tax. Now, under the Indian law, which was introduced in the year 2012, when a company issues share, it cannot issue share unless it is a listed company at a price higher than the fair market value of the share. And the fair market value of the share has to be computed in accordance with the net asset value method, or in accordance with the discounted cash flow method, or any other method which one can satisfy the assessing officer. So this condition was applicable to a resident only when the shares were being issued to a resident. These conditions were not applicable when the shares were being issued to a non-resident or an FII or FPI. Now, this budget has proposed that this will be applicable to non-resident also. Now, when you are subscribing to a share capital of an Indian company, which is not a listed company, you need to make sure that the share price which you are paying is not above the fair market value of the share. India firstly was trying to attract capital from abroad, and FII, FPI, there was no question asked. On the contrary, under FEMA, the RBI need to make sure that the shares are not issued at a value less than the fair market value. Now, the income tax wants that the shares are not issued at a value more than the fair market value. But there are only 2 relaxations on that part. One, registered startups are exempted from this provision. So if you are making investment in a registered startup, then there is no issue of a fair market valuation. Similarly, if the venture capital fund or undertaking is making an investment, so that will also be exempt from this proposal. But both should be recognized, venture capital fund or also the startup should be there. In case they are not now making investment, you have to be a little bit careful that while you make investment in the company, that is fair market. So this probably, I believe, may affect what we call investment in India. So last year in 2022, $54 billion were invested, which is the remittance which came to India in way of the investment in the various FII, FPI, but as compared to $57 billion a year earlier. I believe this issue may come up when I think PE are making investment and etc. etc. Now there is a small amendment regarding the startup. Startup gets a benefit of free tax for 3 years out of the first period of 10-year post incorporation. This benefit was available only to those startups which got registered before 31st March 2023. In order to continue to provide this benefit of startup, this period is being extended by 1 year. Now a startup getting incorporated before 31st March 2024, but now will be also be eligible for a period of tax concession for a period of 3 years out of the 10 year. And similarly, it will be eligible to take the benefit of carry forward of losses for a period of 10 years as against the 7 year at present, even when there is a change in the shareholding on that part. Another issue of your interest will be online gaming. That has been attracting attention of across the world, and I believe OECD also all have been looking. Now India says that in case on the net online winning, one will have to pay tax at the rate of 30%, and there will also be a corresponding withholding tax on that part also. There's another change in taxation of market-linked debentures. These market-linked debenture gets a return on the basis of the derivative which are equity-linked. So these were being considered as a concessional rate of 10%. So now the law has been clarified that these will be considered as an ordinary, not a market or not a derivative like equity, and it will be short-term capital gain which will be liable for 30%. So one need to be take care of when you are making investment in market like debenture also. This part I can skip looking to the time constraint. I believe there are other speakers. These are some capital gain etc. issues. Another change is that if you make a capital gain in India by selling a residential property, or if you are intending to buy a residential property after selling some of the investment you have made in India, the law presently permits under section 54 and 54F, by selling a residential house, whatever the capital gain comes up, if you invest in residential house, that is exempt. If you make a capital gain, if you sell your investment other than the residential house, and if you make investment residential house, there is no ceiling, you get complete exemption. Now the law says this benefit should not be allowed to people who buy new property or new residential house of a value exceeding 10 crore rupees. So in case one buys a residential house of a value exceeding 10 crore rupees, the deduction and exemption will be available only up to rupees 10 crore and not beyond on that. Another small change which may be of interest to you because of your family member or otherwise will be a cap being put on the premium being paid to the life insurance. Now presently when you take a life insurance policy, whatever the amount you received on redemption or maturity, now that amount is exempt. Now the government wants that people are considering insurance as an investment, and so there is no reason why the benefit should be provided. So accordingly, any premium paid in respect of policies issued on or after 1st April 2023, the cap will be 5 lakh rupees at the time of redemption or maturity, or the benefit, if in case the premium paid in any of the previous year in respect of the policy issued after 1st April 2023 is more than 5 lakh, then there will be no exemption. The difference amount, whatever the premium you have paid and whatever the amount you have received in redemption, that will be liable for tax. However, in case the policy get matured because of the contingency, because of the death of the person assured, then whatever other amount is received by the nominee or the legal heir, that will continue to be exempt. So objective is that insurance, if we taken as an investment, then it will not be exempt. But in case insurance is taken for the purpose of what contingency, so that will be exempt. So friends, I think looking to my time constraint, I will stop here. I don't want to go. There are other provisions in the slide, just want to say it. So later on, if time permitting, we can take few questions on that points. That's all. Thank you, friends.
Just a minute. Yeah, thank you so much. Just a minute. I'm going to add the spotlights here. Divya, it's your turn. Please go ahead.
Sure. Thanks. Thank you, CA Jen. That was really informative, and I'm certainly looking forward to learning more about the NRI provisions. So with that, it is my privilege and honor to introduce CA Cecil Nazareth. Cecil has been in the United States for over 3 decades, starting his career with EY before setting up his own firm, Nazareth CPAs, Global Accountants, which is an international CPA firm based in the New York tri-state area. Cecil has served on various AICPA committees, and he was the very first discussion leader after the landmark Tax Cuts and Jobs Act was passed, and he has delivered over hundreds of presentations on various AICPA on-site training programs and in the state CPA societies. Cecil is the author of 2 books, Global Accounting 2021 and Beyond, and the International Tax and Compliance Handbook. Cecil is he's an expert on international tax and accounting issues with a particular focus on US accounting rules and tax compliance. And some of those topics are what he will go over today in his presentation. Away from the office, Cecil is a passionate world traveler and a certified field hockey coach, and he's guided dozens of teams to the collegiate and national team ranks. So without any further ado, let me hand over the virtual mic to Cecil to take us through the tax planning and insights. Over to you.
Thank you so much, Divya. Just want to share my screen. Okay, can you see my screen just to confirm?
Not yet. Not yet.
Oh, I thought I hit share screen. Give me 1 second.
Yeah, no problem.
I'm not seeing the icon to share. Let me just check again.
Can you try now?
Yeah.
Try to change something here.
If you'd like, we can pull up your deck.
Yeah, give me 1 more second. I'm not seeing
Sure.
the menu, Raja or Prasad. That's why I can't. Give me 1 second.
Yeah, just a minute.
Is it in full screen mode? Then you won't see it.
No, I'm not on full screen mode, so. Okay, why don't you pull up? Anyone has it? If not, I'll.
Yeah. Pawan, are you able to pull it up, or I can?
Yeah, if you pull it up, that'll be better.
You can go up, please.
Okay, sure.
Again, tried it before. I just don't have the menu to.
Yeah,
Oh, 1 second. I think I got it again.
Yeah.
Let's try this again.
Okay.
Okay. Yeah, I
Divya.
can pull it down.
You can see it now?
Yes. Perfect.
Make sure my slides are not Ved Jen. Ved is so good. Thank you, all the panelists, folks. And thank you, Consul General. Appreciate your time, and thank you for the opportunity. Best thing India gave me is education. I'll tell you one thing. I left everything else behind, my property, but my family's been here. My brother was one of the first 10,000 chartered accountants, just to give him a little credit. I wouldn't be a CA without him. So he passed in 69, I passed in 80, and I have a second brother who did ICWA, so we don't consider him an accountant. So that's a joke. But education was superb, and India gave me great education, and I've succeeded beyond my wildest dreams. So I thank India for all that. And, so quickly, let me go full screen. And are we good? Can we see full screen, Divya?
Yes. Yes.
Okay, quickly, this is the book, International Tax Handbook. And for all the ICAI members, they can go to my website, nazarethcpas.com. And the code, you just enter code TATA, TATA, and you should get it discounted by $25. So it's $150. It's also on Amazon, but it's more, Amazon is the e-version only. If you go to my website, we'll send you a hard copy. So this is the first book on India-US taxes. And the joke is, the US government, they knew I was writing Trump and the Republicans knew I was writing the tax book. So in December 2017, when the book was almost ready, they decided to change the tax law and mess me up totally. I'm telling you, it took me another 6 months to release this because, so that was a major change in tax law. But good emphasis. I give it to all my books. I've sold more than 1,000 copies. And more importantly, to figure out risk, folks, think of what you don't know. My biggest risk is not what I know. My biggest risk is what I don't know and what I could be in non-compliance. Disclaimer, this is only for educational purpose, and I've done more than 25 sessions for the AICPA. I teach tax update in the US, so I figure out a lot of stuff, and I keep updating my knowledge. IRS enforcement, I'm on slide 4. Very, very important, folks. So I know Chuck Reddick, he was a good friend of mine. He was the ex-commissioner of the IRS. He and I have done sessions together. And I know him really well. And his main issue was try to bring people into compliance. And he's a practitioner himself. He's in California and a very good friend of mine. So amazing guy, to be honest. Second is we got income sourcing, very important slide. I'm going to talk about a few things there. Year-end tax planning for 22, foreign tax issues, and India, US businesses. Okay, IRS enforcement. We talk about IRS commissioner and how his focus is compliance. Now, if you owe more than 55K to the IRS, folks, your passport can get revoked. I know you don't think about this, you don't know. So Indians are pretty smart. They're saying, let's owe the IRS only 54,900. I'm like, no. Don't waste your time playing with fire, my friends. You'll go to JFK or whichever airport you're going to, and you'll realize your passport has been revoked if you owe the IRS more than $55,000. Now, 5471, really important. If you are a US citizen, taxpayer, whatever, and you own 10% or more of a foreign entity, okay, and you're a director, then you need to file this form. And if you don't file this form, it's $10,000 penalty. So folks, this is pretty serious. So keep that in mind. Very recently, August of 2022, there's a case called Puri case. Now, the Puri guy was an Indian citizen and he had money hidden in the US. And what happened was it went to tax court in the US, and he was fighting the case saying the US has no authority to disclose all his accounts to the Indian government. But he lost the case. The US judge said, no, we have an intergovernmental agreement, and this is perfectly valid. If the Indian government requests any information in the US of your holdings, we have the right to give it to them. So folks, this is a really important case. I really want you to look at it. There's intergovernmental agreements, so the US government has the authority to find information for a US citizen having assets in India, and the Indian government has the right to ask for assets hidden in the US. So just keep that in mind. This was in August 2022, so very recent. Documents to support tax returns. Sometimes we make up stuff, folks, that is very dangerous. In tax court, the documentation becomes very important. By the way, I was the first Indian at Ernst & Young in the US. I know how difficult these things are, but I'd urge you to get documentation. Next one, 450. Next, from 2023, this year on, there's a penalty for non-filing a return. So I get some cases, sometimes they didn't file a return. I'm like, what is going on here? But so it's very important. Now, $80 billion allocated to enforcement and update in the next 10 years. Folks, let me tell you a joke. The IRS systems are so old and so antiquated that even the hackers don't know how to hack the systems. So that's a joke. They have 2 million hits a day against the IRS, minimum. All right. So folks, they're bringing things up to speed. Okay, red flags, avoid red flags. Costco and Patel Brothers they are not deductible, folks. You get into trouble. Real estate professionals, if you're a real estate professional, you get a deduction. You can claim your losses. That is the main focus there. Commingling funds, never a good idea, business and personal. Earned income credits, I'll pass on that. False or misleading returns can land you in jail, folks. So US is very strict with their legal compliance. Payroll taxes, misclassification of workers, I'll skip on that. But I'd go back to one thing: documentation. So business expenses need to be substantiated, and last, do not take aggressive tax positions. So often when my clients tell me I want to deduct this and that, I'm like, listen, we are happy to deduct whatever you want. Tell me under what code section of the US tax law you're deducting this amount. I'm happy to go with you. Okay. So always cite code section. My friends, when you go to court, they don't ask you who's your grandfather or who's your grandmother or what's your life story. They ask you a simple question: under what code section are you deducting this expense? Period. If the answer is correct, okay, I deduct $1 million on section 179 CapEx deduction. Yes, great, out of here. Okay, you cannot say that, then you're going to go out no matter what. All right, this is a very important slide. I'm on slide 9. So a lot of people get confused between what is US source income and what is foreign source income. For the benefit of this, we'll use Indian source income. So interest income, it depends on the debtor, right? So if it is Citibank New York, then it's US sourced income. But let's say it's Bank of Baroda in Mumbai, then it's foreign sourced. Dividend income, you're receiving income from Apple US, then it's US sourced. So if it is received from Tata India, then it's foreign sourced. Right. Next one, personal service income. Where are the services performed? So services performed in the US, then it's US sourced. Services performed in India, then it's India sourced. Right. Next one is rent and royalties. Or where is the property located? So if the property located in Manhattan, US, then it's US sourced income. Property located in India, it's India sourced income. India has the first right to tax you. And same thing with capital gains. Okay. So if the property is located in real estate, if you have gains on real estate in India, then India has the right to tax that capital gains. But you will get credit in the US for what you are paying in India. So there's no double taxation. Now, on the federal level, in the US, the state level, you'll still owe that additional tax. Okay, so be careful with that. You can still deduct. Some of the states allow you to deduct that tax that you paid abroad, some don't. Okay, so be very careful with the sale of real estate. In the last 5 years, I'd say, or 10 years, we've got at least 100 cases we've handled the sale of real estate outside. And I left India in 80, so way back, and everyone became rich after I left. I don't know how, but I abandoned all my wealth there, which I had none to begin with. Personal property, now the same thing between sellers, a US resident versus a foreign resident, so important. Year-end tax planning. Okay, another great reduction act, Inflation Reduction Act, was passed in August of 2022. So some really, really good ones, especially on EVs and energy credits. Okay, so keep that in mind. You might want to bear. So Tesla dropped their price. The rule is 55,000 for smaller vehicles is 55,000 MSRP. So if it's below that, you get the deduction, and then your AGI should not be more than 300. There are some rules, but you can go through that. Some research credits in the US, premium tax credit that belongs more to healthcare, and then Medicare drugs cap, but leave that alone. 80 billion in funding. There are two more things that came in that act: 1% for stock buybacks tax, and second, 15% for billionaire companies. This is called a global minimum. It's called GILTI, Global Low Income Taxing Countries. Okay, for short. So 15% tax is levied on all billionaire companies on book income. Very different. Usually it's taxable income, but in this case, book income. Only 150 companies in the US are taxed on that. So there are three big provisions in this IRA Act of the US. So I just want to zero in. So tax planning, accelerate expenses, defer income. That if tax rises, there's a good 20% deduction, Section 199A. So all small businesses get the benefit of this, but that's provided your AGI, adjusted gross income, is less than 340,100. Okay, business auto, very good. The depreciation is really substantial: 19,000 first year, 18 second year, and 10,000 third year. Maximizing retirement accounts, really important. So you can defer some of your income, and if the employer matches, it's even better. If you have SEP plans, self-employed plans, 61,000, defined benefit plans are 245. Capital gains loss harvesting. So every year you should, some stocks that you didn't do well, you $3,000 you can reduce. FSA is flexible spending account. You got $2,800 for that. And then some more. Now, some states allow you what is called PTE tax. So just for example, if you own a small business, then you can deduct the 20% deduction. You can pay the tax at the corporate level and get the benefit on the personal level. Now, charitable contributions, very important. I'm very lucky. I'm very fortunate. I did well in life. So I give back. And so I created a donor advised fund. So I move my money into the donor advised fund, and from there I donate money. So let me give you an example. So I own Tesla stock. I bought Tesla in 2010. Just got lucky. I don't know. I bought for $5,000. Today it's close to $400,000. Correct? Just Tesla. So what I do, if I move some of that into a donor advised fund, I don't pay capital gains. I get a charitable deduction, and then I can give more money away. And so that's the good news about a donor advised fund. Okay, here are quick corporate tax rates. 21% in the US. It's still a very low rate compared to the rest of the world. Individual starts at 15 to 35, and 37 is the max. This was the old rate, but now it's 37 is the maximum rate in the US individuals. Cap gains is the same as in India. We have 0, 15, and 20. India is 20%. And here we got 23.8. 3.8 is a surcharge. Then you get standard deduction in the US, 25,000, state and local, you get 10,000, et cetera, et cetera. So I won't go through that. Okay, in corporate tax, C Corps now 21% is excellent, but AMT is eliminated, alternative minimum tax eliminated in 2017. R&D is still good for 6%, 1%, now you up to $1 million you can write off under section 179 of the tax code. Really good deduction for capital equipment. And then the other two I mentioned, the 15% minimum tax. And the reason they put in, I'm on the Global Tax Policy Committee for the US, and I fight a lot of the issues. So the reason they put this in, the French and a lot of European countries were trying to impose a tax on US companies. It's called digital tax, and we fought it pretty hard in my committee. And I think we did good. So I think also U.S. companies used to shelter money by pushing their money, their profits outside the U.S. So that was another reason the U.S. came in with a compromise, saying let's use a 15% minimum tax. And then if you think 21% as a corporate tax, that's pretty reasonable, my friends. For doing business in the U.S. So that's just two small points here, and 1% on stock buybacks. Okay, foreign tax issues. This is one of the most important slides, slide 16. I always am nervous in my firm. What I don't know is going to hurt me. And 10 years ago, I'll tell you, I could have got hit with a penalty. I didn't know any of this. But today, I'm pretty good on the international side. I consult with companies, corporations, individuals, whatever. So 5471, you might not have heard of that form, but if you're an owner, 10% owner and a director in a foreign company, and you do not disclose that, don't file that form with your tax return, a $10,000 penalty per year. I've handled at least 10 cases. So let me give you a live example. US citizen, an Indian origin, was building a golf course in India, and he got a penalty for $100,000, 10 years not filing that form. I mean, I was like, he was devastated. So this was 2014. So I called, I was not his accountant. So he brought me in and I said, listen, you haven't filed this form. You got to fill it. And so you take the Indian financials, convert to US and file this form. It's absolutely important, but I was able to get him out. We filed for 10 years. And the good news, the golf course was not complete. So I was able to argue that case, and the IRS waived the 100,000 penalty. But today they are not going to waive it. I am so sure you will be hit with that penalty for not filing 5471s. 5472 is the reverse. So you're an Indian citizen, you own more than 25% of the US company, and you don't file a 5472, my friends, the penalty is $25,000. So let me give you a funny story. You invest 10,000 in the US and you forget to file 5472 and never told the accountant. Your penalty is 25,000. You only invested 10. So this is pretty serious, my friends. Now, certificate of residency. This is an excellent thing you should all think about. So you can apply to the US government. They'll issue a certificate to you saying that you're a US taxpayer. You can do it on an individual level or an entity level. And the fee is around $175 to $200. And then once you get the certificate, you send it to the Indian counterpart, then they can provide this to the tax authorities there, saying that this entity or individual or US tax authority, and they'll give you reciprocity or credits, et cetera, et cetera. Now, PFIC is very complicated. I cannot, in the interest of time, cannot deal. It's called passive foreign investment companies. So just a quick example, if I invest in Birla funds in India, then it attracts the highest rate of tax, which is 37%. So all foreign mutual funds attracts 37% rate, not the regular rate of tax. Next one is gifts, estates, inheritance, everything, 35-20. I think Ved Jain, a good friend of mine, by the way, Ved, I've known him for at least 10 years, an amazing guy, former president of the AICP. I was very privileged to introduce him to a lot of the people in the US, but he's an incredible guy, very brilliant. I learn a lot from him. So 35-20, inheritance, you have to file this form in the US, okay? The moment you get inheritance, gifts, estates, whatever, right? You cannot ignore it because later on the basis will be a problem when you're selling real estate either in India or the US. All right, next one is specified foreign financial asset. Now, FIRPTA, this is a rule which is reverse, a non-resident selling US property, and I've handled several of these cases. The penalty, this is a 15% on the gross sale proceeds. Okay, so if an Indian citizen sells US property, bought a property in Manhattan for 5 million, sold it for 7 million, you got 2 million gain, you are going to be taxed 15% of the sale price, not of the gain. Okay, so be very careful with that. FX losses can be deductible. Folks, a lot of people don't know this. Section 988 allows you foreign exchange loss. So here's an example. I invested 100,000 in a CD in India, and then the rupee dropped, depreciated. Now it's 82 or 83 in that range. So I put in at maybe 5 years ago at 70, and now because of the loss in the currency, it's actually a short-term loss and deductible. Sale of property in India, that's basically, I just wanted to comment, this taxes are paid in India. Also a good way to use your Indian money, pay Indian taxes. I never have a problem. Folks, India has been a great country. We got to pay our taxes. So if you have to pay them, don't hesitate. But I do have people who want to cross the line, push the envelope. So I had a case where the person mentioned that they had a capital gain of 2 million for some major sale of property. They paid 600 as an advance and they were getting 400 back. So their liability was only 200 in India. But the person wanted to claim the whole 600 in the US. I said, no, not happening, my friend. This is a defrauding the US government. You're liable to go to jail for this. So let me send you the actual wording in the tax law. Here's an example, but I am not signing this return and our firm is not. Here are the names of 3 other CPA firms. If you want to go or find some other resource who can sign off on this return, be my guest. But I am not, because that is definitely a fraud against the US government. So folks, be very careful. Do not try to take an aggressive position. That was an aggressive position. And it was not even valid fact in law. He 100% knew he was not entitled to that credit, because you're setting off US tax versus the India tax, and definitely not a correct situation. So coming to compliance, I still have people who have not filed foreign bank account. If you in the US own more than 10,000 in foreign bank account and you not complied, penalties are steep, up to 50% of the bank balance. And if you're a willful situation, then it could be jail time. Folks, I had handled 2 or 3 criminal cases. It was the saddest days of my life because they happened to be Indian folks. And the best advice I could give, they were not even my clients. The best advice, I got them to the best attorneys, but I told them one thing, and this was FBI and a lot of people involved. I said, listen, you're in the lion's den. Let's not play games here. Let's come clean and move it along. And I think they took my advice and moved it along. So folks, don't take it lightly. India-US business. Now, there's not a place. I've traveled more than 20 countries in this world, and I know a lot of these panelists have. I'd say, India, that's a great issue is everyone asks me how much after-tax income. They have opportunities to invest anywhere in the world. So what are the different entities? And there's not a single US company who does not want to do business in India. And then there are millions of Indian companies that want to do business in the US. The question is, after tax, what's your best effective rate? And is there a market for what your product or what you're selling? Right? Taxation is only one component of that. But if you feel India is a very big, huge market, and I often think Asia is a big market, and you pay your tax on both countries and you're fine. Companies call me to ask, hey, what is the best approach to set up in India, or vice versa? Okay, we are an Indian company, want to set up in the US. So folks, we can play an active role as chartered accountants, CPAs, in understanding the environment on both sides and educating business owners. But setting up an entity has got to be correct. Okay, in the US, we have S Corps, C Corps. limited partnerships, sole proprietors. We got federal tax, state tax. They don't understand this, the international folks. So we got to educate them. And, but in the book, I covered one topic only on entity structure, which is really important. Okay, M&A, there's a globe, you cannot be called a global company without having a footprint in the US. So that's why most companies you're going to see, and I'm so happy India has, really improved in their compliance. So the India-US things are going to get better and better. I predict in the next 10 years, the India-US partnership is going to be really strong. Both from an M&A point of view, that is US companies buying Indian companies and Indian companies buying US companies. So I think focus on that, and however we play a lead role in that. And with that, just a few more, I'd leave it for, I'm finished with my slides, so we'll leave a few minutes for any Q&A, if at all. And thank you all the panelists and everyone, and thank you for the opportunity. I'd leave you with 2 quick comments of my own. Okay, my job today is giving back. I was very, very fortunate. I came to the US really early, first Indian at Ernst & Young, and I'm still a professor at Fordham University in New York City. I've done superb, but today it's not about me. It's about giving back. I read 2 books. I've written 2 books, so I give it free. If the student cannot afford, here's a free book. My goal is to create the next generation, to help next generation do better than I did. Okay, in whatever way I can. And I've got to give India a lot of credit. My background education, and all 3 of us are chartered accountants and CPAs. My 3 brothers, we are 3 of us. We've done very well. Without that education, I don't think I would be where I am, for sure. So I owe it, indebted to that country of, of my birth, where they have given me a lot to give back. And so today it's not about me. And if there's I want to make sure the next generation is stronger, better. They do better work than I did, and give them opportunities. But I work them hard. I'll be honest. In the university and in my professional firm and wherever I am, even playing hockey, I make sure you're going to play at the best level you can play. Or if you're studying, you got to do the best. You don't come here for half-hearted stuff. I don't have time for that. So my question to you, all of you, how can I help? Okay, don't worry about myself. I'm good. If there's anything I can do for you, the Chartered Accountant Institute, actually, I give credit to Diwani. She found me after 30 years. I had no contact with the ICAI. Somehow she found me and brought me back. And so I'm happy to give back. And the last question, what can I do? How can I help? And if there's anything I can do to assist, and I sponsor a lot of the events on the East Coast for the ICAI. So appreciate everyone's participation today, and thank you very much. Back to you.
Thank you, Mr. Cecil. It was very insightful, and I'm sure many NRIs over here will take help from you and will take your advice. And your last slide was really an opener. So now let me introduce Ms. Kritika Narula. Kritika Narula is leading regulatory affair and public policy vertical at Startup India. Startup India is a flagship initiative of the Government of India intended to catalyze startup culture and build a strong and inclusive ecosystem for innovation and entrepreneurship in India. Launched in 2016, the Startup India initiative has rolled up several programs with the objective of supporting entrepreneurs, building a robust startup ecosystem, and transforming India into a country of job creators instead of job seekers. These programs are managed by a dedicated Startup India team. Let's hear more about government initiatives and incentives from CS Kritika Narula. She is a lawyer, CS, and on Government Advisory Council. Thank you, Ms. Kritika. All over to you.
Thank you, Pawan, for the warm introduction. A very good morning to the Honorable CGI, my fellow panelists, and to my wonderful audience. I, Kritika Narula, would now take you through the Indian startup ecosystem, the journey of Indian startup ecosystem, followed by the impact of Union Budget 2023 on the startups and foreign investors. In a very short span of time, India has shown a great appetite for technology, data, and the internet. The internet paved the way for thousands of startups to rise over the past decade, address unique problems, transform entire industries, and create new segments. These startups are contributing economically, creating wealth, and generating employment through the length and breadth of India. With this, I will share a snapshot behind the scenes of the Indian startup ecosystem. The Indian startup ecosystem is fueled by innovation, enthusiasm, and entrepreneurial spirit. Startups are now a household name and a preferred profession in India. The word startup is trending in India today, but its roots go back to 2016 when the Honorable Prime Minister Shri Narendra Modi launched the Startup India initiative as a clarion call to the innovators, entrepreneurs, and thinkers of the nation to lead from the front and drive India's sustainable economic growth. India's booming startup landscape has evolved in the last 7 years to the third largest in the world, with over 90,000 recognized startups from length and breadth of the nation. Be it startups or unicorns, or the enablers of this ecosystem, that is the incubators and the investors, have grown exponentially in the past few years, as all you can see on the slide. You name the industry or sector, conventional or offbeat, and you will see an Indian startup innovating there. You can see on the map on the slide that innovations in the top 8 sectors, namely deep tech, edtech, media and entertainment, e-commerce, health tech, and fintech, are booming across India. Artificial intelligence, space, clean mobility, and green energy are the sunrise sectors in the coming years in India with immense untapped potential. The numbers themselves speak for the trust investors place in the unique and innovative startup ecosystem of the country. By the time you would finish 3 years hike, the Indian startup ecosystem would witness a seed investment of $1.2 million. When another 3 hours are added, women entrepreneurs of India would have already garnered funds north to $7,000. By the time we have finished our normal working hour, startups in our major metro cities like Delhi, Bangalore, Mumbai would have raised a whopping $11.3 million. The funding landscape in 2022 has seen high benchmarks, be it a 10x growth in the number of mega deals in just 7 years, or India becoming the preferred destination for PE/VC investments, especially from global VCs and sovereign funds. With this, I'll move on to the next segment of the presentation, where I'll be talking about the genesis of Union Budget 2023, the vision it holds, and what impact it has on the startup and foreign investors. In our 75th year of independence, the world has recognized the Indian economy as a bright star. Our current year economic growth is estimated to be at 7%. It is notable that it is highest among all the major economies in the world. This is in spite of the massive slowdown globally caused by COVID-19 and a war. The Indian economy is therefore on the right track, and despite a time of challenge, heading towards the bright future. The G20 presidency has also given a unique opportunity to strengthen India's role in the world economic order. The government's efforts since 2014 has resulted in increase in the size of the Indian economy from being 10th to the 5th largest in the world. Significant improvement in India's position as a well-governed and innovative country with a conducive environment for business as reflected in several global indices. India has also made significant progress in many sustainable development goals. This year's budget is based on the vision for Amrit Kal, which means empowered and inclusive economy. The vision includes technology-driven and knowledge-based economy with strong public finances and robust financial sector. This year's budget adopts the following 7 priorities which complements each other. These priorities are laid on the next slide, and which are inclusive development, reaching the last mile, infrastructure and investment, unleashing the potential, green growth, youth power, and financial sector. Entrepreneurship is vital for a country's economic development. The government of India has taken a number of measures with startups, and they have borne results, as we have clearly seen on the previous slide. India is now the third largest ecosystem for startups globally and ranks second in innovation quality among middle-income countries. The Union Budget 2023 has proposed two significant changes that has a great impact on the Indian startup ecosystem. The first, amendment to the Section 80IAC of the Income Tax Act, which means that budget has increased the date of incorporation by 1 more year for the income tax benefits to startups, which means startups which will now be incorporating in the current financial year will also be available to avail the tax holiday benefit. By tax holiday benefit, I mean startups in India are eligible to claim 100% tax deduction on profits for 3 years out of the 10 years. Along with this, another important amendment has taken place for the startup ecosystem under the Section 79 of the Indian Income Tax Act. This amendment is proposed to extend the period for eligible startups to carry forward and set off their losses incurred in the first 10 years of the incorporation, with 7 years. This change comes as a much needed respite for startups who often face financial challenges in the initial years of operation. Not just this, India has also unleashed the potential by announcing key reforms for the Indian startups. For example, an agriculture accelerator fund will be set up to encourage agri-tech startups by young entrepreneurs in rural areas. A national data governance policy will be brought out to unleash innovation and research by startups and academia. 30 Skill India International Centers will be set up across different states of India to skill youth for international opportunities. The scheme will cover new age courses for Industry 4.0. 3 Centers of Excellence for AI, Artificial Intelligence, will also be set up in top educational institutions to realize the vision of Make AI in India and Make AI Work for India. It is also proposed to bring reforms in the financial sector, which will enable financial inclusion at scale, better and faster service delivery, ease of access to credit, and participation in financial markets. The Union Budget provides for 100 labs, which will be established in engineering institutions to develop applications using 5G services. Additionally, several green programs will be implemented across various economic sectors, promoting clean energy and sustainable practices, which will benefit clean tech startups. Now, I would like to throw light on key announcements under this year's budget for foreign investors. First is the rationalized reporting requirement for foreign investments. In fact, this announcement was made ahead of this year's budget, early in January 2023, where the Reserve Bank of India has rationalized the reporting process for foreign investments in India. This means that the forms submitted for foreign investment on the portal will now be auto-acknowledged and processed within the stipulated timeline. Some of the issues like sequential filing of forms has now been resolved with this new system. To constantly improve the ease of doing business in India, and as my fellow panelists also mentioned, India has reduced 39,000 compliances and more than 3,400 legal provisions have been decriminalized. One of the biggest reforms in this year's budget was PAN will now be used for all digital systems of specified government agencies as a common business identifier. KYC process has also been simplified, among others, under EODB head. You all must be aware of the GIFT City initiative of India. The Gujarat International Finance Tech City is India's first and only international financial service center. It is a home to domestic and international companies in the financial services and IT-enabled service sectors. In this year's budget, the government is proposing to streamline the regulations relating to the GIFT City. Another key amendment for the foreign investors is that the budget has proposed to reduce the time limit for submitting transfer pricing documentation to the tax authority upon inquiry to 10 days from the current 30-day period. Last but not the least, a new substitute authority is proposed to be created to dispose appeals against audit in order to reduce the pendency of appeals. With this, I'm certain that these announcements will empower and strengthen the ecosystem by encouraging and facilitating their growth. Thank you so much. If you have any questions, you can put it in the chat box.
Thank you. I'm just getting this out of the way. Just give me 1 second. I'm trying to organize the remove spotlight. Okay. Thank you all. To start with, thank you, Ms. Kritika Narula, for your insights on the overseas investment opportunities. The startup environment, indeed, in India is truly dynamic. I was in India recently, and the change, the transformation that is happening in the last 3 years is just amazing. So thank you for shedding some light on that. I would like to start by thanking Honorable Consul General of India, San Francisco, again for gracing this event. Thank you so much for the time and consideration you give us. Thank you, Mr. Cecil Nazareth, for your time, giving us insights into the tax environment as it relates to Indians and how we NRIs in the US and how what precautions we should take. Thank you, Vijay, as always, very clear and succinct in your implications of taxes. You simplify all these complex concepts for us. Thank you, Mr. Bhupati. As always, it's been 30 years since I did a direct taxation class with you, but you're a great storyteller after so many years as well. I would take this opportunity finally to thank the attendees for participating. Without you, we don't have this event. I want to thank our supporting partners, Indo-American Chamber of Commerce, Greater Houston, and BMM. And finally, all the chapters in the US and representative offices who have put this event together. This is the second year where we are putting this together in this format. We want this to be bigger, brighter, and greater in the coming years forward. Thank you so much. We will have the recording available in YouTube. We'll share it with all of you. Thank you so much.
Bye-bye.